stock upgrades by brokers generally move the market that day, or maybe for the next 2 or 3 days, and then it depends how many brokers are looking at that stock. So if you've got a big FTSE 100 stock where you've got 20 brokers looking at it, and then one of the major brokers upgrades it, then you've probably got a good chance that some of the other ones are going to kind of come upgraded again themselves in a little while. So it's not bad for the stock, and it might be quite good. In the same way, a broker downgrading from buy to neutral, or there are hardly any actual sells, but again, you've got to think that suddenly some of the other brokers might. So you might get a whole string of people doing the same thing, which isn't generally good for the share price. So you've got to take note of them. I'm never quite sure in the long term whether they're right. I haven't made an analysis of it really, but it would be interesting to, say, get hold of every single Morgan Stanley broker recommendation, or every single Merrill Lynch, or every single Barclays, and see how good they actually were. I'm sure somebody somewhere probably has done that analysis, and see whether they're right or wrong. I remember when oil was at about $140, and Goldman Sachs hit a big announcement. Oil's going up to $220 a barrel, and two months later it was down at 70. It's like, so even the best get it wrong. Even the best.
So do you know people who follow analyst upgrades?
Oh well, yes, of course they do. The big funds do. That's why the analysts send them out. The analysts send them because the big funds do their trades through the brokers. So the brokers send their stuff to the Legal and Generals, the Prudentials, Artemis, Invesco. All these people will be looking. And then they'll go through the analysis, and whilst, people like me will just say, okay, fine, they've done that broker. The fund managers will look at it very closely indeed, because it's generally accompanied by a whole ream of data, and they don't just say, we think it's going up, and the target is £4, it's now £3.20, buy. That's the headline that you see on Reuters or on Bloomberg. But behind that is an enormous amount of analytical material that the fund managers will look at, and then they'll place the orders through generally place the orders through the brokers that's given them the information. So that's why they do it.
What about the saying, do the opposite of what the analysts are doing?
Doing the opposite of what the analysts do? I've never heard that saying, and if somebody actually did do that, I would. The point being that most people only hear these things after the event. So the share price is trading at £3.20p. The analyst recommendation comes out to buy. So the share price goes up on the analyst recommendation. It goes up to 335. So it's a fair enough thing to say after the analyst has made the recommendation and the price has moved in consequence of the recommendation. It's fair enough to then say, well, now I'm going to look at it and say, is the analyst right? Go in the opposite direction, because it's actually already moved a certain amount in the analyst's direction. So you can say it might be the right thing to say, well, fine, I don't agree with him, or he's just as likely to be wrong as right, but the price has now gone up, or the price has now gone down, whichever. So he's just as likely to be right, but I've got a better level to be selling or a better level to be buying. So there is an argument for it, but I've never heard of anybody making reasonable money on that kind of trading strategy. But it's a strategy, so any kind of strategy is probably better than none at all.
How reliable are analyst reports, in your opinion?
Analyst reports used to be much more reliable than they are now, simply because the analysts were permitted to go into the companies and discuss things with the finance directors and but now the rules, the companies are not allowed to talk to the analysts, because insider trading and somebody having more information than somebody. It's absolutely, nobody is allowed to know anything more than anybody else, which makes the market a bit of a crapshoot, really. I happen not to agree with that particular ruling from the and yeah, fine, there might have been a bit of insider trading, but now the lack of quality information on companies is startling, because the analysts just aren't allowed access to the people who can give them that information. So yeah, the quality isn't as good as it used to be.
Interesting.
I happen to disagree with the regulators' ruling on that, but you know, they do it to stop insider trading, and they're obsessed with insider trading.
Well, I mean, based on that, do you think such reports have hidden agendas now?
And the problem with analyst reports is that you do have the feeling that the company is a client, and so they're very unlikely to say anything bad. It's quite rare to find a sell recommendation on a stock, simply because the company is probably the broker's client, and so he's not going to stay your client for long if you just slag the company off. So you have to take them with a pinch of salt, and again brings them into a certain degree of disrepute. But that said, they are better than nothing. And there are very clever people who go into these numbers, I know, and go through the company statements and go through every bit of information. You know, there are even sort of weird, you know, there's the Evel Knievels of the world who go in great detail to all the numbers and say actually they don't make sense. Sometimes he gets it right, sometimes he gets it wrong. But you know, there are people who do that kind of thing, rather like that. I think in the news recently was that short-selling company out in the States made I can't remember what company it was in the UK, but they said basically they didn't believe the numbers that were coming out from the UK company. They made a 30-page analysis of it and said they're lying, effectively, and the share price went down by 35% in one day. Big fall. Whether the American broker is right or wrong is probably immaterial. What is material is the share price fell 35%.